Dangote Cement plans to invest $400 million to upscale a second production line at its Moga cement plant in Ethiopia as it aims to double the facility's annual production capacity to 5 million tons. Abigail Alabi, a Sub-Saharan Africa industrial goods analyst at Vetiva, joins me now as we look at the equities market in Nigeria. Thank you so much for your time today, Abigail. And before we get into that story on Dangote, let's talk about the performance we're seeing in the market today.
Okay, so for the equity market, we have seen that the equity market has significantly improved. And one of the major performing sectors that we have seen is the banking stocks. So the banking stocks have closed up 12% year to date. Yeah. And this is because we have seen a flurry of activities because of the exercise by the CBN for them to raise additional capital. Yeah. And because of that, we have also seen investors also take position in those banking stocks as well. And for those who have released their full-year result, we saw a significantly improved full-year financial performance for some banks that released their results, and also declaration of dividend payment as well. So we have all of these factors drive the performance of the banking stocks. But so far, we have seen that during this week, we have seen some stock profit taken in the equities market. We saw that prior to now, we have seen a lot of stocks, or majority of the stocks rally. They have reached an all-time high. And because of that, we are currently seeing investors taking profit right now. And so we are seeing some stocks trade at a discount. And that's what has driven the perceived or the expected decline in the equities market. So for the rest of this week, we expect that we'll continue to see more profit taking, pending when other companies like Zenith Bank, first, GTCO, and other industrial goods companies will release their result. They will most likely see another batch of rally in the equities market. Yeah,
but do you think these sentiments will shape into next week? This week we've seen quite a lot of also play out there. We saw the inflation figures come out as well. What sort of impact do you think that's going to have into the market going into next week? So
for the recent inflation figures, so we saw that the inflation figures currently reflects the rebasing activity by the NBS as they announced last year. And so the inflationary pressures also, the inflation rate declined to 24%. And right now, we are still seeing investors adopt like a wait-and-see approach, because this is the first of its kind that we have seen in a decade. So this is the first inflationary rate that we have seen since the rebasing figures. So I think investors are still adopting a wait-and-see approach to see how this would affect the money market or the fixed income market before you're able to take major decisions. And also with the MPC meeting coming up, we most likely also see investors also wait for the announcement or wait for the outcome of this MPC meeting before they take actions either in the fixed income market or in the equities market.
Let's get your call for that MPC meeting tomorrow. What's the house call for Vetiva?
So for MPC meeting, I think the MPC or the committee will still adopt a wait-and-see approach as well to be able to assess the impact. So to be able to assess the impact of these inflationary pressures, and also alongside the reforms that has taken place on last year. So I think the CBN or the MPC committee of the MPC meeting will most likely have like a wait-and-see approach to see how the effect of these rebasing figures will affect the inflationary pressures going forward. And like I said, other reforms are also being considered alongside these figures that we have seen for the inflationary rates for January.
Let's get into the industrial goods space now and look at the performance there. I'd love to get your assessment of what we've seen so far in this first quarter.
So for the industrial goods sector, we have seen in the equity market, we have seen significant price increase for the likes of Dangote Cement and also for WAPCO. So for WAPCO especially, the news that drove this rally was the news of the buying out of the Holcim stake in WAPCO. So it's Chinese cement company called Huaxin Cement is currently buying out Holcim's stake in WAPCO. And because of that, and because of the precedent of Huaxin Cement, so previously they've been acquiring Holcim subsidiaries across Africa. And precedent-wise, they've been able to have like a significant turnaround for those companies as well in terms of capacity expansion, advancements in technology. So we're expecting them to also have the same effects in WAPCO as well right now, because currently WAPCO is currently facing we've seen WAPCO underutilizing its capacity, and we believe that once this new company comes forward, we'll most likely see an increase in WAPCO's production and also an expansion of its plants. So those are things that have driven the rise in WAPCO. For industrial goods, we're most likely, or we're definitely seeing investors taking position for the expected result that would be released for Dangote Cement's full year. So we are seeing investors taking, adopting a wait-and-see approach to see when their results will be out, and most likely also wait in line for dividend payment as well, because we're expecting like an increased dividend payment from Dangote Cement, given the fact that we expect EPS to also increase. So all of these factors have been a driver for the performance we have seen.
But let's get to Dangote Cement more specifically now, looking at that expansion of its plant in Ethiopia, $400 million here. What sort of impact do you think it will have on their volumes and output?
Okay, so it's over the last few years, we have seen volumes for the Pan-African segment for Dangote really increase in terms of volume, because the majority of the countries in the Pan-African segment are currently going through an industrial phase, so we are seeing a lot more of industrialization in these regions, and because of that, we've also seen an increase in volumes as well. So this new investment in Ethiopia is also a step in the right direction, or it's a positioning for Dangote Cement to also take advantage of the increased volumes and also the industrialization that is going on in that region. So I think it's a step in the right direction. And also the cement pricing in that region has also been elevated, which has also, has also been able to drive the performance of the Pan-African segment, performance for Dangote Cement in the Pan-African region. So I think we'll most likely see an increased volume especially in the Pan-African region, driven by the volumes that we're expecting to see, or driven by this investment they're expecting to see in the Ethiopian region.
All right, definitely keep an eye on that space to see how it continues to develop. Thank you so much for your time today. Abigail Alabi there, a Sub-Saharan Africa industrial goods analyst at Fetiva.